Is 2023 going to be the year where we see new all-time highs for the price of gold? I'm David Jones. I thought it'd be an interesting market to take a look at, considering it's the beginning of the year, still just about, and we have seen quite a big bounce in the price of gold since the November 2022 lows. So I thought, well, let's do a catch-up. Let's take a bit of a medium-term look at the price of gold. Have a look at the factors that could affect it, one way or the other, for the year ahead, and then jump onto the platform, have a look at the charts and see where the opportunities might be. So let's have a bit of a recap from last year. So we saw almost fresh highs for the gold price in March 2022, and it was something of a perfect storm for gold. We had the concerns about higher inflation, of course, coming into last year. We had stock market uncertainty. Stock market has been on the slide for a couple of months. Then, of course, we had the Russian invasion of Ukraine. So we had all of these factors that traditionally would be good for the price of gold, but it couldn't quite take out the previous all-time high. And then after that, in March, we saw a sharp sell-off. We saw the price of gold sell off by 20% into November of last year, and we've seen the bounce back. So it was an interesting year for those reasons, 2022, that it couldn't actually break out through, I think it's $2,075, the old highs. So let's look at what could affect it this year. So traditionally, of course, gold has been seen as a hedge against inflation. It didn't prove to be the case last year. It was the US dollar that really benefited last year, and a rising US dollar puts pressure on gold. Now, I think clearly we're in an era of higher prices. You know, I've said on some of the live streams I've done in recent weeks that it does feel like we're past peak inflation. It doesn't mean that inflation is going to fall off a cliff anytime soon, but I can't see massive leaps in inflation from where we are now. So I think gold benefiting from further inflation is perhaps not a strong bullish argument for gold in the year ahead. What about stock market uncertainty? Again, traditionally, in times of more, let's say, speculative assets like stocks falling, gold has been seen as a safe haven. Once again, that didn't play out last year for most of last year. You know, we've seen a strong recovery since November, but from March to November, gold was in decline, and we know if we look at something like the S&P 500 that that was still sliding. So we didn't see gold acting as a safe haven destination. Coming into this year, stock markets have perhaps, stabilized a bit. We're arguably, for US markets, still in the downtrend, but I don't think the safe haven thing is one that looks at the moment, looks like it's going to help gold. So what's going to be the thing? I think it does come down to the US dollar. Do we see further US dollar weakness this year? And is this going to be the driver that lifts the gold price higher? So coming into 2023, we are expecting further rate rises from the central bank, the Federal Reserve in the US, to try and again keep a lid on inflation. We have seen the US dollar index drop by around 10% from its September high. So even though traditionally higher rate rises would be good for the US dollar, they're expected to be at a slower pace. So there is the argument there that have we seen, a major peak in the dollar, and a fall of 10% since September would suggest that we have. If we saw further US dollar weakness from here, that is definitely something that could fuel further rises in the price of gold. So for me, the dollar is the thing to watch here. And if you're interested in gold, absolutely, I think you should be looking at an index like the dollar index, the DXY, to see how is the dollar performing and what are the trends in the dollar. So for me, that's going to be the big factor for this year. So personally, I don't think we're going to see fresh all-time highs in gold, but I absolutely do think the worst of 2022 is behind us. The new trend is up. It's a buy the dip market, and we'll take a look at this in a bit more detail in a second when we look at the charts. When it comes to some analyst forecasts, I don't know how useful they are because I had a look before I came on. It's quite a wide spread. So for example, at the top end, Bank of America are forecasting $2,000 an ounce by the fourth quarter of 2023, and near the lower end, Credit Suisse are forecasting $1,650 an ounce. So a bit of a difference between those two numbers. Like I say, I don't put too much weight on these longer term forecasts. I think it's far more useful to watch how the market develops. So we'll jump on the charts in a second and take a look. A quick advert first of all for the trading course I run. It's been running for a couple of years now. I added a short-term module back in September of last year. I'll talk about the numbers, how that's doing when we take a look at the charts. But to find out more about the training course, go to the website jonesthemarkets.com. I'll put the link in the description below. I'm also going to start sending out a weekly newsletter. If you go to the website and the sign up box is at the bottom of the website. So you can see that there, just a weekly newsletter highlighting perhaps one or two interesting markets for the week ahead and the odd trading tip in there as well. So if you go to the website, you'll find out more. Anyway, let's have a look. Let's take a look at the charts and see what the medium term might look like for gold. So let's take a look at this this gold price. I thought it'd be interesting to go back and have a look at this perfect storm for gold coming into 2022, just over a year ago. So we did see the market rally from the end of Jan. Then, of course, we had later on the Russian invasion of Ukraine. The price of gold got as high as 2070, but didn't take out, not quite, the August 2020 highs, just shy of 2075. So in hindsight, that was quite telling that we had this perfect storm, but it couldn't move any higher. And then if I take a step out, if you watch gold, you know what happened next. You know, we saw that high hit in March, and then by September through to November, it was bubbling around just above $1,600 an ounce. I think it was a market that perhaps could have wrong-footed a few of us last year, because we did have this big support left from March of 2021, and then again, or it spiked through it in the summer of 2021, and again in July of 2022, around 1680 an ounce that had been holding the market back. It did sail through it in September, but it has since then proved to be quite the floor. So for me, what's interesting in gold now is the last 12 months. So let's zoom it up. So we've absolutely seen a good run for gold off those November lows. So the 3rd of November low was at 1616. And here we are at the time of recording, about $300 higher. So not quite 20% higher, but a big old move in the space of about 2.5 months. A great trend. We'll have a look at this trend in a bit more detail in a second. I would perhaps just be getting a little bit nervous up here because of the strength of the bounce back. You know, we've got good resistance, which is where we are today, and probing through today around about 1,915. Bigger resistance, and this for me is a big level. The bounce back after the sell-off from that attempt on all-time highs. So the bounce back around $2,000, that high there from April of last year. And then after that, 2070, 2075, last year's high and the old all-time high. So I think from about, let's say 2000 up to 2075, I think that's going to be, if we do see gold push into that zone, it's going to be interesting to see what happens. I would expect some nerves and some profit taking to come out. A quick look at the RSI. I don't think we're getting too much from that. I mean, clearly it's overbought at the moment. It went overbought last week, 11th of Jan. The market's carried on pushing higher. Last time it was overbought, we saw a sell-off for a couple of days, and back here, sell-off for 3 days, 4 days. So even though the trend has been, even though the RSI has been overbought for the last couple of months, the trend has been strong and the trend has continued. And as I often say about indicators, this is one of the problems in a strong trending market. The price of gold doesn't care that its RSI is overbought. But perhaps for those who wanted to be a bit cautious up here about being a buyer, that could be something that would add into the argument to be a little bit cautious. But what I'd like to do, the trend is still up. I'd like to be a buyer on weakness. So let's focus in on this trend. Let's flip it down to perhaps an hourly chart and take a look at things in a bit more detail. Before we do that, a quick update on the numbers from my trading account. So as a quick reminder, if you haven't seen this before, I launched the shorter term trading course back in November of last year as part of the overall trading course that I run. As part of that shorter term trading course launch, I said I'm going to trade an account, a £4,000 account with the approaches I outline on the course. And I outline 4 different trading setups on the shorter term course. This is the rolling 30-day profit from that £4,000 account. So on every trade I take, because I'm risking losing only 2.5% on every trade, it's £100 risk per trade. This is the last 30 days. So it's up £988, so almost 25% on this £4,000 account over the last 30 days. I have to say, of course, past performance is no guarantee of future performance. 80% of trades have been winners. I've done 15 trades over the last 30 days because it was Christmas, of course. I've done fewer trades, and that's the overall track of the P&L. To have a look slightly longer term, if we wind it back for the last 3 months. So that's the 3-month performance. So up just under £2,200, which is a 54% return on that £4,000 account, pretty much from a standing start. That is pretty much where I started trading it back then at the end of October. You can see the progress. 68% of trades have been winners, much more realistic number. So I've done, you can see, 57 trades in total since the 18th of October. I've got a couple of trades running at the moment, but these are the closed trades. So to find out more about the trading account, trading course, and a bit more detail, if you go to my website, jonesthemarkets.com, the description, or the link I should say, is in the description to this video, and any questions you can get in touch with me via the website. So if we pick up on this gold trend, I suppose it looks something like this. I've flipped this over to an hourly chart now, going back to the 3rd week in November, and this is where we are. That trend has done a great job. It's accelerated. The price of gold has accelerated this year away from that trend. At the time of recording, the gold price is sitting around about 19.16 an ounce. So for me, an interesting trade if I wanted to be a bit patient and buy into this, 2.5 month plus trend. I'd like to see a sell-off, perhaps back down to the mid 1800s. So what I'm saying is, even if the price of gold drops, $75 from where it is now, about 5% from where it is now, we're still within this overall trend. So for me, I think this is an interesting trend to follow. For medium-term traders, we've got a sharper trend in place here for perhaps more aggressive traders. But for me, if it gets knocked back to the 1850s, it still looks like a good opportunity. If we go back to the daily charts, if we saw a much deeper sell-off for the gold price and takes out the mid 1800s, we've still got so much support running from, first of all, the lows towards the end of November, 1725, then pockets of support are about 1760, 1780, all these levels. So I think it does get interesting if we see a much deeper sell-off. But for me, I would be taking the view that any weakness in the price of gold still looks like a buying opportunity. I don't think we're going to see it blast through the highs at 2075. Where it is now, I might be a bit cautious of buying in for the medium term. But if we see a bit of a dollar resurgence and the gold price under pressure in the short term, I do wonder if that ends up being a really good buying opportunity. That's it for this update on gold. So a really interesting year, some interesting moves off that big level in last year. Those November lows down around 1620. It's had a great run since then. You could argue, I suppose, it's a bit overextended. It will be interesting, I think, if we get something of a harsh sell-off for gold to see where the buyers come in. But for now, at the moment, I'd definitely be expecting sell-offs to look like buying opportunities. But of course, let's not forget, let's keep an eye on the US dollar as well. We'll wrap things up for there. Any questions about the training course or anything else, feel free to drop me an email or get in touch via the website. Otherwise, good luck with your trading.